In this video, we're going to dive into whether you should swing trade or day trade crypto if you're interested in trading. Now, of course, there's no correct answer to this, but the key is figuring out what is the best for you. And in this video, I'm going to go over at least my knowledge when it comes to both of these. Personally, I'm more of a swing trader than a day trader, so no, I do have a bias, but I'm going to try to be as unbiased as possible. So let's go ahead and dive in and let's get some ideas on really what the difference is between swing trading and day trading in crypto and why somebody would want to either swing trade over day trade or day trade over swing trade. Okay, so let's dive into this chart here. This is Bitcoin, and we're going to first cover day trading because this seems to be the one that people hear the most about. So they think that that means trading. So we're going to just dive into day trading and really break that down. So the biggest, or at least the definition that I believe for day trading, is that you are looking to take trades within a day. So this is more like treating trading like a job. So if we're looking at Bitcoin here, you can see each of these candles here are a complete day of action. So essentially, if I just circle one of these, say I'm just circling this candle right here on the 29th of August, that would be an entire day's of price action. And if you were, say, a day trader, you'd be looking to trade basically that day. So you're not necessarily, if you're a day trader, going to be looking at a high time frame where every single candle is a day. You're going to be looking at breaking the candles up and the price action up to where you can view the whole day, typically more granularly. So the first thing when it comes to day trading is you're going to be looking at where you can capture the entire day's price action. Now, an easy way to do this, I think, is by using some indicators to help you not have to segment the day with your own lines. So what I'd like to do is just go to this indicators and type in sessions. So we have sessions from Lux Algo right here. And what this does, if I go down to, say, a 15-minute time frame, what this does is a few things. It, one, breaks the days. As you can see here, here's Monday, there's Tuesday, and then also it breaks the market sessions into Tokyo, London, New York, and you can't really see it over here. It says Sydney, so that's the Australian session. So day traders will not only take trades within a day, but they might actually just focus on a specific market session where the markets are more volatile, or just specifically the session that they're awake for. And they're going to hop in this session, say it's New York session. So let's just zoom in here. So I'm looking at Bitcoin on the 15-minute time frame. You can see this block here in New York. A day trader may be looking to, say, take a position at some point in the day. Maybe they're going long, and then at some point they're going to exit their position near the end of the day, or they're going to try to take multiple positions. The main thing is they're typically not holding for multiple days. They're going to be holding for that single day. So they're treating trading like a job. Okay. So the big question that you would have to ask yourself if you do want to be a day trader is, do you want to treat trading like a job? This is the most active trading that you can do. There's something called scalping, which is essentially day trading even more frequently. We're not going to go into like the super nuances, but basically day trading is treating trading like a job. So what are the pros of treating trading like a job? Well, a pro is that you have set times. Typically, day traders, they will trade certain days of the week. They'll trade certain sessions like the New York session, or they might trade London session. They might trade only the first half of the session. And then once they're done, they're out of their positions, and that's it. So that can be a benefit. But also, you can turn that into a con as well, right? A lot of people choose trading and investing as a way to gain freedom and to not have a job. So when it comes to swing trading, I'll show you where you're looking a little more longer term. That is where you're not going to be signing into a certain session and paying attention to the market for a certain session. Another thing in day trading is obviously, say we're just trading this New York session right here every single day or every few days. You obviously, a lot can go on within a session. And what you have to do is be very attentive to the markets. This is essentially something where you're going to be glued to the charts. And you have to pay attention because, you know, each of these candles, they're only, in this example, only 15 minutes long. So you can easily miss out on something if you are not paying attention. So this is something where you really have to dedicate that attention span to making sure that you can catch these moves. And number two, yes, there's a lot of action, but also there's a price to a lot of this action. You're kind of like a loaded gun here. You can have you know, an itchy trigger finger where, you know, you might be sitting here trying to be patient, waiting for these setups, but you might take the wrong sorts of setups because, you know, the market's moving fast. You might have to make decisions quickly, etc. So even some traders, they're trading on even smaller. When I day trade, I will often trade on these smaller time frames, like a 5-minute time frame. And you're having to make decisions quite quickly because each of these candles is only 5 minutes. And one of the other things I'll point out about day trading is that when you are looking on these smaller time frames, you're going to have to consider that what happens on a smaller scale will often have to coincide with what happens on a larger scale. So if I zoom back out to that daily time frame, you might have a lot of price action within that day, but also you have key buyers and sellers on these higher time frame levels. So if you do want to be a day trader, you definitely have to pay attention to the higher time frame levels and bring those down to lower and lower time frames to make sure that when you are on those smaller time frames, say you're on the 5-minute time frame, we'll just go to the 15-minute time frame. That, say the market starts coming down to this key level, you're aware that this is a major low in the market. So you really have to learn how to break down the market pretty extensively if you do want to be a day trader. And then on the pro side, obviously there's going to be a lot of opportunities to take trades. You know, you're now looking inside a single day. Whereas swing traders, they might be looking inside multiple days, multiple months, multiple weeks to see something form. You are now looking very granular so that you could potentially have more opportunities. But the truth is, more opportunities does not necessarily mean better, right? You know, to find really great opportunities when it comes to day trading. I mean, even if we look at some of these past days, well, the big move for Monday was right here. And the other moves were quite small if you were going long in the market. Say we go to, you know, more of a choppy day in the market. Let's get out of the weekend. So you can have some sort of choppy days in the market where you might think the market is going long, but then it eventually goes short. So on and so forth. Just the bottom line is, yes, you will have more potential opportunities, but you definitely have to make sure they are valid. And having so much noise, if you will, on these smaller time frames, it can be very difficult to know really where the key levels are at. So hopefully that's helpful there. I would say if you want to be a day trader in crypto, there's a few things characteristics I would be making sure that I do want to participate with. So number one is essentially having trading as a job. You know, you will be clocking in and clocking out to specific hours. Something where you really like a lot of chart time, where you will be paying attention to the charts. You'll be watching, each and every candle to make sure you're not missing a move. You'd assume kind of when you're day trading that you wouldn't necessarily need to pay much attention because you're only on for a short period of time, but you actually do have to really pay attention the majority of those sessions so that you catch those moves. I'm sure you can set alerts. There's ways to mitigate it, but most day traders I know pretty much nose to the screen. Another thing is you want to be somebody who has very, very high emotional control. If you are trading on these smaller time frames, you're going to want to make sure that you are patient for the right setups. I mean, this applies to all of them, but you're going to see a lot more action on these smaller moves than the higher time frames. That if you don't have a lot of emotional control, a lot of times it can lead to that itchy trigger finger, and then you can take trades that you wouldn't necessarily fit your strategy. But if you do like that intense environment, you do like kind of nose to the charts, waiting for those moves and taking quick action and making quick decisions, then day trading could be for you. And also, this is something that you can try a little. I used to try day trading all the time. I figured out I was more of a swing trader. I do sometimes day trade, but I did day trade for a long time. I did like hopping into a session, knowing exactly when I wanted to trade. But for me, I found out there was a lot of noise on these smaller time frames that made it just a little more challenging for me to find very, very significant levels than on the higher time frames with more of a swing trade approach. Let's see here. Yeah, I think those are good considerations when it comes to day trading. I would say the last consideration, and this applies to both, but mainly for day trading, is if you're day trading, you're going to want to make sure that you're trading a very liquid cryptocurrency. When I mean liquid, it means there's a lot of volume. Bitcoin, obviously the most liquid cryptocurrency. There's a lot of price action. There's a lot of buyers and sellers. This means that the market structure is going to work well on a small time frame typically, because there's going to be buyers and sellers at pretty much every level for Bitcoin. But if you trade something super small, like a meme coin day trading, there's not going to be buyers and sellers at every single penny at these things. So there's going to be a lot more key levels that don't work. A lot of people, they get into day trading cryptocurrencies and they wonder why it just stops working with these other altcoins. It's because you're just looking at less liquid markets. So definitely in day trading, I think the higher the liquidity is better. Even when swing trading, it's very important, but less so. Okay, so hopefully that gives you a little bit of a perspective on day trading. Of course, we could go wild with this stuff, but I just want to give you some key ideas. The next is going to be swing trading, and we're going to define swing trading a little more broadly as well. So day trading, we did a little broad. We're saying get in and get out in a day. Obviously, there's some day traders that hold positions over multiple days. Obviously, there's some day traders who take hundreds of positions in a day. They'd technically be considered a scalper. A swing trader is essentially, this is the easiest way I can say for a swing trader, is you're attempting to hold positions for as long as possible, and entering those positions at specific opportune moments. So just like in day trading, you're looking for those specific opportune moments to jump in. That's going to be your strategy. What's your entry criteria? But in swing trading, you're also going to be looking for those opportune moments, but you're going to try to hold them for as long as logically possible. So day traders will often close out their positions at the end of the day. That's pretty much the definition. And if they hold them for longer through multiple days, that's going to be more of a swing trade. Now, some people can start to chop up swing trading into, if you only hold it for a few days, it's a swing trade. If you hold it for a few months, that's a position trade. If you hold it for years, that's a long-term investment. So there are gradients to these things. But I think that the most broad and easy way to think of swing trading is finding opportune moments in the market to where you can hold those positions for an extended period of time, ideally as long as possible, right? So typically swing traders are then looking at these higher time frames. Reason being, and I would say swing traders look at the market on sometimes monthly, weekly, daily time frames. And the reason being is because if you want to hold a position for as long as possible, you're likely going to want to see this at least over multiple days. So why not look at the daily chart? Because then you're going to see what the trend looks like over multiple days, or the weekly chart, looking what the trend looks like over multiple weeks. And that's going to give you an idea on where the key levels are that could potentially move for days and weeks and months. Okay, because if you get in and try to take a swing trade on a very small time frame, like what happened in the last 5 minutes, who knows really if that's a very significant level, right? If I know the 5 minute trend, who knows what the 5 minute trend is going to do and how that's going to hold. But if I know the weekly trend and I understand where key levels are on the weekly trend, then I can potentially note areas where the market could move for weeks, etc. Okay, so just a quick example, say some trader, some investor was drawing this trend line and they noticed that the market was coming close to this trend line again, started to make a bounce. They decide to get in. And what happened there is they're now holding a position, who knows, say still to today, for 168 days, it's up 30%, etc. So these, you kind of want to correlate it. If you want to find a position that's going to run for the next few weeks, you're probably not going to look at a 5 minute time frame. If you want to see one that runs for the next 5 minutes, that makes sense. But here, if you want to see something that could run for weeks, let's look at the weekly trend, for days, daily trend, and so on and so forth. Okay, so what's one of the benefits of swing trading? Well, a huge benefit of swing trading is the freedom, in my opinion. So like day trading, you kind of have to treat it like a job. And of course, you can do things outside of your job, but swing trading, since we're looking at higher time frames, these moves happen in a much more in a much more gradual way. And you don't really need to pay attention to the charts every second to wait for a key level to hit on, say, a daily or a weekly time frame. You're just going to have alerts that you place, and when the market does hit that alert, that is when you're going to check the position, either enter it automatically or enter it manually if it checks out, and that is going to be how you typically swing trade. So you can go work your current job. You can, just wait. Even when I'm doing anything else, I'm traveling, whatever it is, if I hear my alerts, it takes me 2 seconds, I'll get into a trade. I can set my alerts up every Sunday. It just takes 30 minutes. And it's very, very low intensity in terms of the setup. But the impact is great. One of the caveats that I'll say as well is that there are billionaire swing traders, there are billionaire day traders. So there's no one that is better than the other. And like I mentioned before, you may say, okay, I could maybe find more opportunities day trading, and I'll actually prove that wrong in a few ways here, that I'd make more money if I can trade more often. Definitely not necessarily the case. Really, the success in trading comes to, accuracy a lot. If you're trading a lot and losing a lot, it doesn't make a lot of sense. But if you're trading a little and winning a lot, that makes a lot of sense too, right? Okay, so that's the first thing, is swing trading is definitely something you can add to your lifestyle very easily. And let's just look at, say, Solana. Also, when it comes to cryptocurrency, obviously cryptocurrency has some pretty big moves in the market. So like I said, the goal of swing trading is to hold on to positions for as long as you can. And if you are day trading, there's no way you would catch, say, this move in Solana. Where Solana back here in 2023 blasted all the way up to almost $300, all the way from about $25. If you day traded, you would have probably gotten in and got out, got in and get out. Might have lost a bunch of trades, but in the swing trade, you could have held on a lot longer. by trying to find these bigger moves. So one of the things I love swing trading crypto for is that you're essentially in a market that has huge moves, and swing trading is a strategy to catch huge moves. So that makes sense to me. But if you're trading something a lot more choppy, like Forex, that I think day trading makes a lot of sense, because you're not necessarily going to miss out on a gigantic move in the Forex market, because it is so, a lot of it reverts to the mean, right? All the currencies kind of oscillate with each other. So holding long term really won't get you too far in currency trading. Some swing trades work great in currency trading, but generally you're not going to just see these huge directional moves, maybe once every blue moon. So with swing trading, you're going to have a strategy to capitalize on if the market does have a huge move, which I think is super a huge advantage. And like we said, also, this is stuff where you can do it more passively. You don't have to be glued to the charts. And now the biggest argument people have against swing trading is that, okay, if I'm looking at the, say, like a weekly time frame, I mean, I'm not just about to wait weeks and weeks and weeks. Like, for example, say we do take that breakout, just a classic swing trade. Let's say we do see this breakout of this bottom here, and a swing trader decides to put on a position right here and try to hold on to this position, maybe trail their stop loss as the market moves up. They might say, well, I'm not just about to wait 532 days for that move. And I agree, that's definitely something you don't want to do. But the key with swing trading, and a lot of stock traders are swing traders too, is you need a lot of options. So there's millions of cryptocurrencies. So what you can do is you can actually filter through these cryptocurrencies and find the cryptocurrencies that are close to what you are looking for. So they could be filters on which cryptocurrencies are trending above their 200-day moving averages, which cryptocurrencies are overbought or oversold. These are ways where you can filter through literally millions of cryptocurrencies and find key levels that are being broken either to the upside or the downside. So that's the cool thing, is you can just filter through cryptocurrencies to find really what you're looking for in the market. Of course, you don't want to overfit it, but it is a benefit to actually having more options when you are a swing trader. Now, here's, I think, one of the largest benefits as well of swing trading, is that swing trading, since we are looking at these higher time frames, let's go into a different one. All right, let's just look at Fetch. So since we are looking at these higher time frames, so I'm looking at Fetch AI on the weekly time frame, there is a whole week of price action in each one of these candles. So if the market decides to break above or below some of these key levels, it's going to be much more significant than if Fetch broke above or below a key level on, say, a 5-minute time frame. So we can just kind of see the magnitude of this stuff. Like, for example, we see this bullish flag pattern here before this gigantic move to the upside for Fetch. See this big extension to the upside. Then we see this bullish flag pattern. And bam, the pattern breaks out above all these weeks. And then the market moves very aggressively and makes its move. I mean, how many bullish flag patterns are here? There's not too many. Yeah, there's some right here, but there wasn't really a breakout, right? It just fell back down. So it's just that one bullish flag pattern. But if you go down to a smaller time frame, I mean, how many bull flag patterns are you going to see? You're going to see, maybe hundreds of them as you go around in the market. But on these higher time frames, you can really see the pattern set up. And a lot of times these patterns work really well because they're showing a significant amount of price action being broken. So a lot of times swing traders have a higher win rate than day traders because They're just using a lot more price action. The levels are much more significant when broken. So I'd say the biggest con with swing trading is there is a need for patience. Obviously, every single day when you're in swing trading, you may not find a major breakout. You're definitely looking for those bigger moves when it comes to swing trading. But like I said, if you really do some digging, a lot of times you can find some cryptocurrencies that are setting up for major swings in the market. I mean, every single day there is one. So it just matters how hard you look. But certain sectors may not be ready to break out yet. You might be looking at the artificial intelligence sector. You might be really bullish on it, but the market's just not set up yet. With swing trading, you're not really going to find those moves until the market is ready. So maybe that's where you'd be day trading or looking at a different sector. So I'll pause there. I know we went a little bit deep. Definitely let me know in the comments any questions you guys have on that. Hopefully that gives you some ideas on the difference between day trading and swing trading. Like I said, there's no wrong answer to this. You definitely have to figure out what's best for you. I would say the best thing to do is figure out what your personality is and what interests you and gravitate towards that. In the end as well, you know, it's what you're good at too. And I think that's what makes things a lot easier as well. Like I did think day trading is super sexy and all that stuff, but I don't make as much money day trading as I do swing trading. I make way more money swing trading. So that made it more fun for me. And I got to learn how to get better and better at it because it was more fun. And I learned how to find more opportunities in the market. So once you kind of figure out what you're best at, what interests you the most, what fits your personality the most, I think that will get you the furthest in what to choose. And of course, there are people who are both, right? There are swing traders who are day traders as well. Like I said, I do day trade sometimes as well. So you can eventually have both. But I would say it's definitely good to kind of focus hard on one and become that expert, because it does take time to do this stuff. It does take practice, and to kind of double your workload to get 2 strategies down definitely is a lot. So usually 1 at a time works best, and you'll figure out which one that you like the best. So hopefully you enjoyed that. Let me know in the comments as well if you want to see any other trainings, and I'll see you guys in the next one.